Hello students, hope you all are doing good. In this video, I would be covering the income tax amendments as applicable for May or June 2026 exams. Students who are appearing for any of this exam should note that the Finance Act applicable for your exams would be the Finance Act 2025 and the previous year will be 25-26 and accordingly the assessment year will be 26-27. Any computation or questions asked in your exams will be for previous year 25-26 or assessment year 26-27 guys. Please also note that anything contained in budget 2026 or the new income tax act will not be applicable for your exams to be conducted in the respective attempts. The new income tax act will be applicable only from May 2027 and onwards. Also, before I start with the amendments, guys, I have prepared an amendments reference material, the soft copy of which is available on our website under the free resources. So, I would suggest you to have it while watching this classes. The link for this PDF will also be provided in the description of this video. You can check it out. Also, if you have my provision book, which you would have bought last year, you can keep it along while watching this video so that if there is any small changes, you can update then and there itself. And in this amendments reference material, all the amendments are highlighted in red color. And you need not worry about the content which is in black color. I have just taken it for a reference or just to give a context of the topic for you. Clear? You guys need to focus only on the content whichever is in red color, guys. Also, the video might be little long because I want to cover each and every amendment in detail along with the questions and illustration so that the student will get 100% clarity on how the amendments can be applied in the questions. Fine, we will begin with the discussion of amendments. So the first amendment is in tax rates, guys. The tax rates under the default regime has been amended. The default regime given under section 115 BAC is applicable for an individual who is resident or non-resident irrespective of the age and every HUF, AOP, BOI and artificial juridical person. There is a change in the slab rates applicable on normal income taxable at normal rate. So what is it? We will see. Up to 4 lakh, it is called basic exemption limit. There is no tax on it. Then from 4 lakh to 8 lakh, the tax rate is 5%. Then 8 to 12 lakh, it is 10%. 12 to 16 lakh, it is 15%. 16 lakh to 20 lakh, it is 20%. 20 to 24 lakh, it is 25%. And above 24 lakh, it is 30%, guys. So you can observe there is a trend here. For every 4 lakh increase in income, the tax rate will be increasing by 5%. And for the income over and above 24 lakh, the income is straight away taxed at 30%. We also call this as slab rates, guys. I have one question on it, which is very simple. We'll quickly go through it. Yes, you can see here. Mr. X has a total income of 26 lakh, which includes only house property income and interest on FD, which both of them are normal income, taxable at normal rate. Okay, so let us calculate the tax under default regime for Mr. X. So up to 4 lakh, it is nil because it is basic exemption limit. Then 4 lakh to 8 lakh, the difference between the upper limit and lower limit comes to 4 lakh, guys, into 5%, which is 4 lakh into 5%, 20,000. Then 8 lakh to 12 lakh, find out the difference between the upper limit and lower limit, which is again 4 lakh into 10%, which will give us 40,000. Then 12 to 16 lakh, it is 15%. Accordingly, the amount comes to 60,000. Then 16 lakh to 20 lakh, the tax rate is 20%. Accordingly, the amount comes to 80,000. Then 20 to 24 lakh, it is 25%. The amount is 1 lakh. Then over and above 24 lakh, the tax rate is 30%. So we need to see what is the total income of Mr. X? 26 lakh. So 26 lakh minus 24 lakh, we get 2 lakh into 30% will give us 60,000. So the gross tax liability of Mr. X is 3,60,000. Then there is no surcharge and rebate in this question. So straight away health and education says at 4% on this figure will give us 14,400. So the total tax liability which the assessee has to pay under the default regime would be 3,74,400. Guys, you can just observe, actually madam has made it more easier now. For every 4 lakh increase in income, the tax rate will increase by 5% and even the tax amount will increase by 20,000. So there is a trend here. Clear? I repeat, for every 4 lakh increase in income, the tax rate will increase by 5%, whereas the tax amount will increase by 20,000. This is up to 24 lakh. Over and about 24 lakh, it is always 30%. Got it? And if there is any questions on this under MCQ section, then it would be very easy for you to calculate. Up to 24 lakh, guys, this amount comes to 3 lakh. Straight away, up to 24 lakh, you can take 3 lakh, and over and above 24 lakh, whatever is the difference, you find out and apply 30%. For example, assume the total income of Mr. Vikas is 30 lakh. Then how do we calculate tax? Up to 24 lakh, 3 lakh fixed. Okay. Then over and above 24 lakh, how much is there? 6 lakh. So for 3 lakh, you had 6 lakh into 30%. Straight away, you get gross tax. Straight away, you get gross tax. Yes, guys. Fine. So this is the change in with respect to the slab rates under default regime. Sir, what about the optional scheme? There is no change under the optional regime, guys. Then coming to domestic companies. Domestic company who is not opting for optional schemes now has two tax rates. One is 25%, the other one is 30%. Sir, when is 25%? If the turnover or gross receipts of such domestic company in the previous year 23-24, there is a change in year here. Clear? Yes. If the gross receipts or turnover of a domestic company in the previous year 23-24 is up to 400 crore, then the tax rate would be 25%. If not, sir, what if the turnover is more than 400 crore? Then the tax rate would be 30%. Guys, one thing to note here is they are not talking about the income or profit. Please be careful. Students are getting confused with this. They are talking about the turnover or gross receipts, which is nothing but sales figure. If it is up to 400 crore in the previous year 23-24, then the tax rate applicable for the domestic company for the previous year 25-26 will be 25%. If not, sir, what if the turnover is more than 400 crore? Then accordingly 30%, guys. Got it? Yes, sir. Fine. These are the changes in tax rates. Then coming to the tax rates applicable on special income, guys. See, actually there is no amendment in this, but last year there was a lot of confusion in this tax rates, especially the capital gains topic. Correct? So I've just given a note here. You can observe. Let me read it. On capital gains special income, the new tax rates implemented from 23rd July 2024 will be applicable for the entire previous year 25-26. So last year you would have also felt it lot of confusion with this, but now it is easy, guys. Last year you would have read two rates, that is from 1st April to 23rd July old rate, then from 23rd July to 31st March new rates. Now for previous year 25-26 only the new rates would be applicable. Sir, should I remember the old rates? No, not required. But there might be few exception cases. What is it? I will tell in capital gains chapter, guys. So in simple, in this topic, there are no amendments. I've just given it as a clarity. So that you need to remember only the new rates. Yes. The next important amendment is in rebate under section 87A, guys. The rebate under section 87A under the default regime has been amended. Please be very careful with this because I am expecting a question on this in the exam. Yes. Rebate to resident individual paying tax under the default tax regime under section 115 PAC. Previously, the limit was 7 lakh, but now it has been increased to 12 lakh. So, if the total income of a resident individual is up to 12 lakh, they are eligible for a rebate under section 87A. How much, sir? Actual tax liability or 60,000, whichever is lower. Whichever is lower. I have one question on it. Quickly, we will see that. Yes. So you can see here, Mr. Raghav is a resident individual whose total income is 11,50,000 and he is following default regime. Sir, how do we calculate the tax liability of Mr. Raghav? So up to 4 lakh, it is basic essential limit, so nil. Then 4 to 8 lakh, it is 5%. The amount comes to 20,000. Then 8 to 12 lakh, it is 10%. But here, Raghav has only the total income of 11 lakh 50,000, which is completely normal income, guys. Please be careful with it because he has only salary income and interest on bank FD, both being normal. Yes, sir. So in this step, we need to take only from 8 lakh to 11 lakh 50. So the difference between this comes to 3 lakh 50 into 10% gives us 35,000. So the gross tax liability is 55,000. So now calculate rebate. Whenever you calculate till here, no, just pause for a second and think whether rebate is available or not. In this case, rebate is available. I have given a note for that. You can just have a look into it. So how much is the rebate, sir? Your actual tax liability or maximum 60,000 max, whichever is lower. Maximum is 60,000, not flat. Yes. So here the actual tax liability is only 55, claim that much. So the total tax liability of the assessee comes to nil. And please be careful, guys. Rebate should always be checked before health and education cess. Yes. Fine. Sir, what if the total income of a resident individual who is following default regime is more than 12 lakh? Should we still check the rebate? Yes. Similar to marginal relief calculation, guys, we should still check rebate. Sir, how is it? We need to apply 3 steps there. So if the total income of such individual is more than 12 lakh, then still we can check, but marginally more than 12 lakh. Okay. Yes. How is it, sir? Step 1. Total income minus 12 lakh. See how much is your income over and above 12 lakh. Take that. Then in step 2, do the normal tax calculation. Then last step, if B, that is if B, whatever we have computed in second step, if that is more than A, then the difference is allowed as rebate. Sir, what if A is more than B? Then there is no rebate. Then there is no rebate. And sir, when should we apply this step, sir? Is there any shortcut to remember? Yes, guys. I have just given the number you can see. You apply these steps only when the resident individual who is following default regime has a total income of more than 12 lakh but up to 12 lakh 70,585. Sir, what if it is more than this? For example, 12 lakh 80 or 12 lakh 90. Guys, the assessee is not eligible for rebate. Even if you apply this step, you will get 0. Because in that case, A will be more than B. A will be more than B. When A is more than B, there is no rebate available. Hope you guys got it. And this is not the number given in the law. It is a computed figure. If possible, try to remember so that you will exactly know when to check the rebate by applying these steps and when not to check. Got it? Yes. I have one more question on this also. Let me have a look into it. Yes. So you can see here, Pawan has a total income of 12 lakh 20,000, which is completely a normal income and is following default regime. Okay. Sir, can we check a rebate under section 87A? Yes. Guys, here you can see the total income is more than 12 lakh, but marginally. Marginally. By small margin. Yes, sir. So let us apply the steps. Step 1. Check how much of the income is in excess of 12 lakh, which comes to 20,000. Yes, sir. Then in step 2, do the actual tax calculation for 12 lakh 20, not 12 lakh, 12 lakh 20. Yes, sir. Up to 4 lakh nil, 4 to 8 lakh 20,000, 8 to 12 lakh 40,000. Then 12 to 16 lakh, it is 15%, but we will stop it at 1220. So 1220 minus 12 lakh, we will get 20,000 into 15% gives us 3,000. Yes, sir. So 63,000 is the tax liability. For only 20,000 increase in income beyond 12 lakh, our tax liability is increasing by how much? 63,000. Sir, why? Because if Pawan's total income was exactly 12 lakh, his tax liability would have been 0 no? Because he is eligible for rebate. Yes, sir. But now his total income has crossed 12 lakh only by 20,000. For that, his tax liability is increasing from 0 to 63,000. Sir, is it fair for Pawan, sir? No. So that is why they are giving rebate, guys. Sir, how much is the rebate? The difference between 63,000 and 20,000, which amounts to 43,000. Which amounts to 43,000, guys. Yes, sir. So remaining figure is 20,000. On that, add 4% health and education cess. You'll get the total tax liability of an assessee under the default regime is 20,800. Yes, sir. Got it. Then, sir, is there any changes for rebate under optional scheme? No, guys. It is same. It is same. The limit is 5 lakh. if the total income of a resident individual under optional scheme is up to 5 lakh, then he is eligible for a rebate of actual tax liability or 12,500, whichever is lower. I have also given a question for this. You can just have a look into it. Okay. Yes. I will just show you. If you want, you can also pause the video and have a look into it. Yeah. There is no amendment in this, but I have just given one question so that you guys can practice. Yes. Wherever I am discussing any question or illustration, if you feel, sir, I need to go through it, maybe you can pause the video and go through it, guys. Okay. After once I explain, you can just pause the video and have a look into it. Yes, sir. Fine, guys. So now there are notes on rebate. The third note is very, very important. That is amendment. Yes. What is it? We will see. In case the associate is paying tax under the default tax regime as per section 115 BAC, rebate under section 87A is not available in respect of tax payable on any special income. Please note it. It is not available on tax payable on any special income. Any means any special income, which includes capital gain special income or any casual income also. Whereas under the optional scheme, the scenario is different. Sir, what is it? However, in case the assessee opts out of the default tax regime following optional regime, rebate under section 87A is not available in respect of tax payable on long-term capital gain under section 112A only. This is for the assessee who is following optional scheme. That means if I am an assessee who is following optional scheme, if I have an income under section 111A or 112 or 115 BB, which is a casual income, or BBJ, can I claim a rebate against it? Yes, I can claim. I can claim. So please be careful. There is a difference between default scheme and optional scheme. This was anyway, was there previously also, but now this is the most important. Yeah, yes. I will also discuss the illustrations on that. Next, rebate is available against tax on other special incomes like short-term capital gain under section 111A, long-term capital gain under section 112, or even a casual income. But please be careful. This is only for which assessee who is following optional scheme. Got it? Yes. Very important. I am expecting a question on this. Have given an illustration on it. We'll quickly go through it. Yes. Illustration on rebate under section 87A under default regime, guys. So assume the associate is having a long-term capital gain under section 112A, which is 2 lakh. Then casual income under section 115 BB, 1 lakh. Then other income is 7 lakh. Yes. So the total income comes to how much? 10 lakh. Now let us calculate the tax liability. First, we need to calculate the tax liability on special income. Which are the two special income which the assessee has? Long-term gain and casual income. Let us first calculate the tax on that. Tax on long-term capital gain under section 112A is 2 lakh, but up to 1,25,000 per year is not taxable. So remaining is how much? Only 75,000 taxed at 12.5%. The amount comes to 9,375. Then tax on casual income under section 115 BB, flat 1 lakh into 30%, which gives us 30,000. Then on other income, which is taxable at slab rates, guys, which is also called as normal income, up to 4 lakh basic exemption limit, 4 lakh to 8 lakh, it is 5%. So I'm straight away taking 7 lakh minus 4 lakh. 4 lakh is nothing but basic exemption limit. Yes, we will get 3 lakh. 3 lakh into 5% gives us 15,000. 15,000. Yes. So gross tax liability is 54,375. Now tell me, is assessee eligible for a rebate under the default regime? Yes, he is eligible because the total income is within 12 lakh. But can he claim entire 54,375 as a rebate? No, guys, because rebate is not available against the tax payable on any special income. So how much rebate he or she can claim is only 15,000. 15,000. So this two figure, should they pay? Yes. So only 15,000, which 15,000 is nothing but tax on normal income, which is calculated at slab rates. Okay. Remaining 39,375, which is nothing but the tax on special income plus 4% health and education cess has to be paid by the assessee, guys. This is under which scheme? Default scheme. Sir, what if the assessee is following optional scheme? Let us see. Long-term capital gain under section 112A is 1 lakh 50. Casual income under section 115 BB is 20,000 and other income is 320. What is the total income? 490, which is less than 5 lakh. Yes, sir. Is the assessee eligible for the rebate under section 87A? Yes. Then do the tax calculation. Tax on long-term capital gain, which is 1 lakh 50, up to 125 it is not taxable. So remaining is 25,000 taxed at 12.5%, gives us 3,125. Then tax on casual income, 20,000 is there, straight away taxed at 30%, gives us 6,000. Then tax on other income, 3,20,000, on which we need to apply slab rates. What is the basic exemption limit under the optional scheme, guys? It depends on the age of the individual. But here I have considered it as age less than 60 years. So 2 lakh 50 is the basic exemption limit. So 3 lakh 20 minus 2 lakh 50 into 5%. Sir, what if the associate is a resident senior citizen? Then this 250 becomes 3 lakh. Sir, super senior citizen, then 5 lakh. Clear? Yes. Anyway, you guys already have an idea about it. Yeah. So the gross tax comes to 12,625. Guys, now pay attention. What is the amount of rebate available under section 87A for an assessee who is following optional scheme? Actual tax liability or 12,500, whichever is lower. Sir, here can we claim full 12,500? No, not possible. Why? Because rebate is not available against tax calculated on long-term capital gain under section 112A. Sir, against casual income available? Yes, available. Yes, available. Yes. So how much is the rebate which an assessee can claim? 9,500. 9,500. Yes. So tax liability after rebate comes to 3,125. Add 4% cents and pay it. Got it? So please be very careful with this, guys. I repeat this. I repeat this point. Yes. If a resident individual is following default regime under section 115 BAC and if his total income is within 12 lakh or if he is eligible for a rebate under section 87A, he can claim rebate, but he cannot claim rebate against the tax payable on any special income. Okay. Sir, what if the assessor is following optional scheme? Then he can claim rebate against special incomes, but only against one special income he cannot claim. What is it? 112A long-term capital gain. Got it? Sir, other incomes on which special rate is applicable, can he claim? Yes, for example, I have given here in green color. Short-term capital gain under section 111A or long-term capital gain under section 112 or casual income under section 115 BB or BBJ. Can he claim the rebate? Yes, under optional scheme. Let us move forward. Next, moving on to the heads of income, guys. In salary chapter, there is two small amendments. Specified employees has been covered. Few perquisites are taxable only in the hands of specified employees, guys. Who is specified employee? A director who is an employee of a company or an employee who is holding substantial interest in the company, that is 20% or more. And the last one, employees whose income chargeable under the head salary exceeds the prescribed limit. There is an amendment in this. The prescribed limit of how much? 4 lakh is a specified employee. And here, how do we calculate salary, sir? Taxable salary minus all the non-monetary perquisites. Even non-monetary perquisite is a part of salary for income tax purpose. But only to check this limit, we need to exclude all the non-monetary perquisites, guys. If that figure is more than 4 lakh, then we consider that employee as a specified employee. Previously, this limit was 50,000. Now it has been increased to 4 lakhs. Yes, sir. Next, value of perquisite in respect of medical facility. If it is outside India, there will be three expenses which will be incurred, guys. The cost of medical treatment and cost of stay, which is incurred for an assessee or a dependent, is exempt to the extent permitted by RBI. Yes, there is no change in that. Whereas, sir, what about the cost of travel? Cost of travel which is incurred by the employer will be exempt if gross total income of the employee is not more than 8 lakh. If it is up to 8 lakh, that is less than or equal to 8 lakh, then cost of travel will not be taxable. Sir, what if gross total income is more than 8 lakh? Then whatever is the cost of travel will be taxable as perquisite in the hands of employee, guys. Is that clear? And please be careful. The figure given here is gross total income and not gross salary. Got it? Yes. Fine. So this figures 8 lakh here and 4 lakh here has been amended, guys. Rest all remains same. And please don't worry about the content which is in black color. I have just taken it for a reference, because instead of giving only 50,000 has been increased to 4 lakh, then here this amount has been changed to 8 lakh. Instead of telling only that, I am also giving the reference or context to that topic, guys. Clear? But you need to just focus on whatever is in red color. That is the amendment part. Got it? Yes. Then in house property, there is no amendment. Then the third head of income, the most important head, PGBP. In that, under section 37, whichever expenses has not been covered from section 30 to 36 is generally allowed as deduction if the following conditions are satisfied. All the conditions has to be satisfied. We call this as general deduction. Yes? Yes. For this last year, an explanation was given. There was an amendment in this part, correct? Last year. But now government has notified few laws with respect to this, guys. What is it? We will see. Let me read the explanation once. Any expenditure incurred by the assessee for any purpose which is an offense or prohibited by law. Okay. Which is an offense or prohibited by law. I have also given an example for it. Yes. Or to settle the proceedings initiated in relation to contravention under the such law as may be notified by the central government in this behalf is not deducted or is not deductible. Yes, this was an amendment last year. Now, central government was given a power to notify any law under which a proceedings has been settled. Okay. So, which are those laws which are notified by the central government? We will see now. This is an amendment part. Central government has notified the following laws, that is Securities and Exchange Board of India Act 1992, that is SEBI Act, Securities Contracts Regulation Act 1956, Depositors Act 1996, Competition Act 2002. Yes. So if assessee has contravened any of the provisions under this respective act and he has paid the amount to settle the dispute or to settle the contravention, then whatever amount he has paid to settle this contravention is not allowed as an expenses for income tax purposes. Got it? Yes, sir. Rest all remains the same. Then in section 43BH, if any payment to be made for the small or micro enterprise, if it is not made within the due date given in section 15 of MSMED Act, then such expenses will not be allowed on accrual basis, but it will be allowed in the year in which payment is made. Got it? Yes. This is the provision which is given under section 43B. Guys, please be careful. MSMED Act covers micro, small and even medium. But what is covered in Income Tax Act is only the payments to be made for micro and small and not medium. And not medium. Is that clear? Yes. They have also defined what is micro and small enterprise. There is an amendment in that case. The limits has been changed. What is it? We will see. Manufacturing enterprises and enterprises rendering services, who is called micro enterprise. If they satisfy both this condition, it is called as micro. Yes. Investment in plant and machinery or equipment is less than or equal to 2.5 crore and turnover is less than or equal to 10 crore. And guys, please be careful. Both the conditions has to be satisfied because in between and is there. Got it? Yes. Then sir, what is small enterprise? Investment in plant and machinery or equipment is up to 25 crore and turnover is up to 100 crore. Guys, what I would suggest is remember what is micro enterprise, the limits. Okay, into 10 will be the small enterprise limits. Okay, so small enterprise is 10x of micro, guys. Is that clear? Yes, sir. Chalo, we'll move ahead. In capital gains head, it is more of clarification for you. There is no more amendments here. I would like to give more clarification here. Why so? Because guys, last year I know this was one of the biggest headache for the students, but now it is slightly easier. Anything which was applicable on or after 23rd July 2024 will be applicable for our entire previous year 25-26. Got it? So there were a lot of changes with respect to tax rates, period of holding, indexation, no indexation and all. So now it is slightly easier for you guys. Yes. So period of holding, now we have only two. 36 months criteria is not there. 12 months and 24 months. Under 12 months, only the three set of assets will fall. Rest all will fall under 24 months, guys. Got it? You would have already learned all this, so I'm not going in detail. And even with respect to buyback of shares, there was an amendment from 1st October 2024. So you were supposed to learn two things last year. From 1st April to 30th September, if buyback happens, then the provision was different. And if buyback happens from 1st October to 31st March, then the provision was different. But now, same, one single provision for the entire previous year 25-26, guys. That is the new provision. What is it? Sir, if there is a buyback of shares from a domestic company, then it is taxable in the hands of shareholders as dividend income without allowing any expenses. Straight away, the buyback price will become a deemed dividend under section 222 and taxable under the head other sources. Whereas, if there is a buyback of shares by any other company other than domestic, or with respect to buyback of ESOP shares by any company, the income will be taxable in the hands of shareholders as capital gains income as per section 46A and not other sources. Got it? Yes. So even this, guys, again I'm telling you, it is not an amendment. Last year it was an amendment, but last year you would have learned two different provision, old provision, new provision, but now focus only on new provision. That's all. Yes. And cost inflation index, indexation is removed for most of the assets. Only for tool assets, that is land and building, it is available. That too while calculating tax only. But anyway, good to know. What is the cost inflation index for the previous year 25-26 means 376, guys. Whereas for the base year 2001-2, it is 100. Okay, please try to remember this number. Then in point number 17, okay, and whatever point number I have given here is as per my provision book. So that if you have it, it will be easy for you to refer, guys. Straight away, you can go to that particular point. Yeah. So computation of capital gains under section 50AA was applicable for three assets. What are those, sir? A specified mutual fund acquired on or after 1st April 2023. And what is specified mutual fund? There is a small change in it, which I have given in the notes. Specified mutual fund is a mutual fund or a fund which invests more than 65% of its total proceeds in debt and money instruments. Okay, we can call it as debt oriented funds. Okay, sir. Next, a market linked debenture, and the last one, an unlisted bond or unlisted debenture which is transferred or redeemed or matures on or after 23rd July 2024 was there. But now you need not worry about that date. Why, sir? If this unlisted bond or unlisted debenture is redeemed at any time during our previous year, it is covered under section 50AA because automatically it will fall off on or after 23rd July, guys. Is that clear? And please be careful. Don't get confused with this date and this date. Guys, here what is given is acquisition date on or after 1st April 2023. Whereas here what is given was redemption date. Got it? Yes, sir. Not a major change, but you should be aware of. Yeah. Now coming to tax rates again. Guys, there is no change in tax rates on capital gains income. But you are supposed to know only the new rates which has been affected on or after 23rd July 2024. So on short-term capital gain on the transfer of listed equity shares, units of equity-oriented fund or units of business trust which is covered under section 111A, the tax rate is 20%. Yes, sir. Sir, what if the same assets are long-term? Then it is covered under section 112A. The tax rate is 12.5% in excess of 1,25,000. Means up to 1,25,000 it is not taxable. Only over and above. Clear? But this benefit is not available under section 111A, guys. It is only for long-term gains. Yes. Sir, what if there is any other long-term capital gain on the transfer of any asset other than this? Then it is covered under section 112, guys. There we have to be careful. If the asset transferred is a land or building or both, acquired by whom? Resident, individual or HUF before 23rd July. Before 23rd July they have acquired, but they have transferred it after 23rd July. Then there is two tax rates. Lower of 20% with indexation or 12.5% without indexation. Okay, I will explain this along with one illustration later. In detail, I will explain. Then, if it is a land or building or both acquired by resident individual, but on or after 23rd July, then this benefit is not available. Only one rate, that is 12.5% on the gain which is computed without indexation. Or even if there is any other assets acquired any time, any other assets covered what and all, sir, other than this three and land and building covered here. Any other assets like gold. For that, one single rate, 12.5% on the gain, which is computed without indexation. Clear? So what is more important is this part. Okay, because even the institute know that students might get confused here, so they may test you here, guys. Please be careful with it. Yes, sir. Fine. So there were few common points which I had given under section 111A, 112 and 112A. One small change there also with respect to rebate, which I already covered in tax rates topic, guys. So please make a note of this also. Okay, now indexation part. Again, I am telling you, this is not a change made in this year, guys. This was an amendment or change made in the last year. But please be very careful and know how exactly it has to be implemented or applied in the questions. So let me discuss this. I will go little detail about it, guys. Indexation benefit for long-term capital assets. Now it is available only for two assets, guys, land and building. And it is sold by whom? Few conditions you have to take care. Please listen here. Please listen here. What is the asset sold? Long-term capital asset being land or building. Who sold it? Resident individual or HUF. When they purchased it? Before 23rd July 2024. But when did they sell it? On or after 23rd July 2024. Obviously, guys, the year of transfer will be our previous year only. That is 25-26, any date in that year. So you should just ensure that all these conditions are satisfied. If all these conditions are satisfied, is assessee eligible for the indexation benefit? Yes. But indexation benefit is only for tax calculation and not for income calculation, guys. Please be very careful. I have given the important note here. Please note. Let me read it one by one. First, include the entire long-term capital gain without indexation on transfer of land or building or both in the total income calculation. So while computing the total income, please compute long-term capital gain without indexation and include such income under the head capital gains. Compute total income. But while calculating tax, we need to compute two figures. One is which we already computed. The other one, we need to compute long-term capital gain with indexation and apply the respective tax rates and take whichever is lower as tax liability. I've given the second step, you see. While computing tax liability of resident individual or HUF, calculate the tax on long-term capital gain without indexation at 12.5%. Keep it aside. Then calculate one more figure. That is, calculate the tax on long-term capital gain with indexation at 20%. Sir, should the assessee pay both? No, no. Whichever is lower. Whichever is lower. Other calculations remains the same as. Other calculation means assume the assessee has some other income, normal income or special income. On that and all, any calculations or adjustments will change, sir? No, those things remain same. Yes, I have also given one illustration on it. Let us go through it. Illustration on tax payable on long-term capital gain under section 112 on transfer of land or building by a resident individual or HUF tax. So date of purchase is 10th October 2015. So it is before 23rd July 2024. Cost of purchase is 10 lakh. Date of transfer is 10th November 2025. That is after 23rd July 2024. Yes, sir, during our previous year. Sale value is 50 lakh. So we need to compute two long-term gains. One long-term gain without indexation, which comes to 50 lakh minus 10 lakh. That is sale value minus cost. Okay, assuming there is no expenses on transfer and all, I have just not considered it. So the long-term capital gain without indexation comes to 40 lakh. Please include this in total income calculation under the capital gains head. Include it. Compute the total income. Okay, sir. Then tax on long-term capital gains without indexation comes to how much? 40 lakh into 12.5%. This calculation you will do only if the question is asking you to calculate tax liability. If not, ignore this part. Okay. Yes. So tax on long-term capital gain without indexation. So on 40 lakh, 12.5% comes to how much? 5 lakh. Then we need to do one more calculation, long-term capital gain with indexation. So from sale value, reduce indexed cost of acquisition. How do I calculate it, sir? Take the actual cost into cost inflation index for the year of sale. What is the year of sale? 25-26. What is the cost inflation index for it? 376, which we just now discussed. Divide it by cost inflation index for the year of purchase. The year of purchase is 15-16. The cost inflation index for that is 254, which will be given in the question. You need not worry about it. Okay. So how much the long-term capital gain with indexation comes to? 35 lakh 19,685. On that, apply 20% and calculate tax, which comes to 7 lakh 3,937. Yes, sir. Then, sir, should the assessee pay both? No, whichever is lower. Whichever is lower. 5 lakh. This should be included in tax calculation. Is that clear? And for this, if the assessee has any other income, then calculate tax on that. Just add it to this. Just add it to this. Is that clear? Yes, guys. Fine. And please note that indexation will have an impact only on this calculation. For any other assets, indexation will not come even though you are computing a long-term capital gains, guys. Please be very careful with that. And most of the time, the date of transfer will fall in our previous year 25-26, but there can be few exceptions, guys, where the transfer would have taken place in 1 year, but the capital gains will be taxable in some other subsequent years. Like, for example, insurance compensation received, or compulsory acquisition has happened and the compensation is received in some other year, or if capital asset is converted into a stock, the capital gains will be taxable in the year in which stock is sold. Correct. No? So in such cases, the transfer would have happened in 1 year and the taxability will be postponed to the year in which the amount is received or the year in which the converted stock is sold. In that case, yes, the calculation might impact 2 years. Even in that case, sir, can such questions can be asked in exams? Yes, maybe yes. But as you already have an idea about indexation calculations for last year and all, that will not be a problem for you guys. Yes, just have a look into this illustration, guys. This is important. Yeah, we'll move forward. Then there is a small amendment in section 54 EC, which is exemption. If there is a long-term capital gain on the transfer of land or building, an assessee can claim an exemption provided he invests such amount within 6 months from the date of transfer in some specified bonds, guys, which is redeemable only after 5 years. So which are those bonds, sir? Already few bonds was there like RECL bonds, PFC bonds, IRFC bonds and NHAI bonds. Now two more bonds has been added. Which are those? Housing and Urban Development Corporation Limited, that is UDCO, issued on or after 1st April 2025, that is the beginning of our previous year, or IREDA, that is Indian Renewable Energy Development Agency, issued on or after 9th July 2025. So should we remember this date? Good to know, because exemption is available only for the bonds issued on or after these dates by the respective companies. Clear? Yes. Guys. So next amendment is in deduction chapter under section 80CCD. 80CCD talks about the National Pension Scheme or trust. Guys, if I am an associate who is under employment, I can open the NPS account where both me as well as my employer would be contributing. Or even if I am a self-employed person, I can open NPS account and only I would be contributing for it, for which deduction is available under section 80CCD. Now, one more thing has been added, which is an amendment. A parent or guardian can open an NPS account in the name of minor child, for which the contribution would be made by parent or guardian, and even deduction is available for that person who is making the contribution. That is either the parent or guardian. That is an amendment part here. So you can see, I will just show you just a minute. Yeah. So under section 80CCD, deduction is available for assessee contribution. Sir, what is the maximum deduction available? 10% of a salary, that assessee contribution means employee. Okay, yes. Or if I'm a self-employed person, I can claim maximum deduction, which is 20% of gross total income. And 80 CCD subsection 1 as a maximum limit as per section 80 CCE, which tells all these three sections put together, maximum deduction which an assessee can claim is how much? 1,50,000. But there is 50,000 additional bonus deduction given as per section 80 CCD subsection 1B, which is outside the limit of 1,50,000. This 50,000 deduction is for whose contribution? Assessee contribution. And this is over and above 80 CCD subsection 1. So that means for assessee contribution, he can claim deduction even under subsection 1 as well as 1B. Yes. But 1 comes under the maximum limit of 150. So most of the assessee who is following this may already have deductions under section 80C, 80CCC as well as CCD. So if they are not able to claim under subsection 1 because of this maximum cap, then they can push the deduction for section section 80CCD subsection 1. Yes. So maximum is how much? 50,000 for assessee contribution. Now, even that NPS Vatsalya. NPS Vatsalya is a scheme which is opened for the minor child by the parent or guardian, for which the parent or guardian is contributing, they can claim deduction. Maximum how much, sir? 50,000. Maximum 50,000 in aggregate. In aggregate. Please be careful. Listen here. This is very important. Now assume I have a NPS account in my own name for which I am contributing. I have also opened NPS account in the name of my minor child. What is the maximum deduction I can claim under subsection 1B? Is it 50 plus 50 or both put together 50,000? Both put together 50,000. That is for my own NPS account as well as my minor child NPS account. Both put together maximum is 50,000. Is that clear? Yes. This is an amendment, guys. So let me quickly go through it. Each point is important here. Deduction for contribution made to NPS Vatsalya scheme. NPS Vatsalya is an NPS scheme designed for a minor Indian citizen up to the age of 18 years. The account will be opened and operated by the guardian on behalf of the minor. When the minor attains the age of 18 years, the account will continue to be operational and will be shifted into a NPS Tier 1 account. Okay. Deduction under section 80 CCD subsection 1B is allowed for any amount paid or deposited in the account of minor under the pension scheme by the assessee, being a parent or guardian of such minor. So who can open the account in the name of minor is the parent or the guardian. And whoever is contributing this to this account of minor child, that is either the parent or guardian, that person can claim deduction under section 80 CCD subsection 1B to the extent of maximum 50,000. However, the aggregate amount of deduction under section 80 CCD subsection 1B shall not exceed 50,000, which I already explained, guys. Now, sir, what if money is withdrawn from this account? Is it taxable? Yes. The year in which it is received will be considered as income in the hands of the person who has received it. Sir, what if by chance minor child dies and on the death of minor child, the parent or guardian received the amount? Then it will be completely exempt, guys. Then it will be completely exempt. On the death of minor, if the parents or the guardian is receiving the amount from NPS, then it is fully exempt. Sir, no, sir, minor is still alive and the amount is withdrawn from the NPS account. Then how much is taxable? Guys, amount is not fully taxable. Exemption is available to the extent of 25% of the amount contributed. Exemption is available for maximum how much? 25% of the amount contributed. Remaining, if any, will it be taxable? Yes, it will be taxable. Please be careful. And this exemption is only when minor child is still alive and the amount is withdrawn from NPS. If by chance, if minor child has died and if the parent or guardian is withdrawing the money from NPS account, it is fully exempt. Got it? Yes, sir. Okay. This is an amendment with respect to deductions topic. Next, TDS, TCS and advance tax. TDS and TCS has undergone few amendments. What are those? We will quickly go through, guys. Pay attention, pay attention. I know. And For those who couldn't clear your exams last attempt, guys, don't worry. You know better what went wrong, why you couldn't clear. Please make sure that you will correct it now. It's high time you realize your mistakes and bounce back, guys. And your bounce back should be such a way that no matter what, in this attempt, you are going to clear your exams. Please be aware that no one might be ready to listen to our failure stories. Only when we are successful, people will value for what we have done. Sir, I did so much of hard work. I studied for so many hours, but still I couldn't clear. Just tell me, will anyone be satisfied with whatever we are telling? Maybe not, guys. So just give that one reason for yourself as well as for your family members to celebrate. That is that successful on your screen, guys. And I know you will do it. Please give your best. Don't make any selective study, guys. I know, especially taxation is a voluminous subject. While studying it, you feel like, oh, yo, too much is there. I don't have so much time to cover. Guys, if you want to do it, you will definitely do it. And if you try to find a reason not to study a particular topic, you will get hundreds of reasons. So my suggestion is please don't skip any topic of both direct tax as well as indirect tax. Please focus on each and every topic, and everything is important, guys. And because some students will focus only on what is important or what is small. So or that particular area or topic is too lengthy, sir. So I don't have so much time to invest on that. Guys, it's okay. Please make sure if you are studying for 10 hours, try to increase it. I'm just giving a random number. Try to increase it to 12, 14. It is possible. If you think you can do it, you will definitely do it. Right? No? Yes, sir. Hmm. So with respect to TDS topic, guys, there are few amendments. Let us quickly go through it. In few sections, the limit, that is the threshold limit, has been amended. Yes, I have given all the sections wherever there is an amendment, but you focus only on what is in red. Okay. In section 193, the threshold limit has been made as 10,000. Payment exceeding more than 10,000 in a financial year, TDS has to be deducted at 10%. And what payment here is covered is interest on securities like bonds, debentures, and all. Yes, sir. Then TDS on dividend income. The threshold limit is more than 10,000 for an individual shareholder, or if the shareholder is like a company, partnership, firm other than the individual, there is no threshold limit. TDS starts from rupee 1. Yes, sir. Then 194A also, the threshold limit has been changed. If interest is paid by a banking company, cooperative bank, or the post office, the threshold limit applicable is 50,000. And if the account holder is a resident senior citizen, then instead of 50,000 is 1 lakh. It is 1 lakh. Is that clear? Yes, sir. Then, if the interest is paid by any other person other than them, then the threshold limit is 10,000. Is that clear? First, identify who is the payer. Assume the payer is a bank, cooperative bank, or post office. Then identify who is the account holder. Under account holder, there will be two categories. First, resident senior citizen. Then 60 or more. That is the age is 60 or more. Following any scheme. Okay. What's the threshold limit? 1 lakh. Any other person, sir? Then 50,000. Sir, what if the payer is not a bank, cooperative bank, or post office? Then the threshold limit is 10,000. Got it? Yes. Then, under section 194B and BB, they have told whatever is the threshold limit. No, it is per transaction. The threshold limit remains same, but they have told that now it is on single transaction. Whereas for all other section, most of the section, the threshold limit is per financial year. Whereas here they are telling whatever 10,000 threshold limit is there, no, that is per transaction. For example, I won 8,000 two times. Should they deduct TDS? No, because 10,000 is per transaction. Assume I want 12,000 from any winnings in the same year. Should they deduct TDS? Yes. So please be careful. 10,000 is per transaction or per winnings. Then 194D, the threshold limit has been increased to 20,000, and there is a small change even in the rates. If the payee is a domestic company, the TDS rate is 10%, or if the payee is any other person, then it is 2%, guys. Then it is 2%. Then 194I, very important change, rent. in excess of 50,000 per month or part of the month. Previously it was per year, but now they have made it as 50,000 per month or part of the month. If a tenant is paying more than 50,000 rent per month, then TDS has to be deducted as per section 194I. Okay. Then 194J, the previous limit was 30,000 for each category of expenses, but now they have made it as 50,000. So you can observe the threshold limit here. Payment exceeding 50,000 in a financial year for each category of income, for each category, because number of categories of expenses are covered here. Whereas for the payment made to directors, there is no threshold limit. For a director, assume director fee or sitting fee is paid only 5,000, 10,000. Should TDS be deducted? Yes. Assume I am a professional who is earning both technical fee as well as professional fee from a company. They are paying me 30,000 each. 30,000 technical fee, 30,000 professional fee. Should they deduct TDS? No. Because 50,000 is for each category. Is that clear? Yes. Okay. Next, 194K. The threshold limit is 10,000 now. You can just update, guys. Then and there only. If you guys open the provision book, you will be having the TDS chart at the end of the material. No, you just make the changes. Only the amounts has been changed. Then 194 LA, the threshold limit has been increased to 5 lakh. Yes. And one new section has been added, guys. That is 194T. This is for the payments made by the partnership firm to the partners. If partnership firm is paying to the partners in the form of salary, remuneration, commission, bonus, then before they pay that amount, they have to deduct the TDS at the rate of 10%. Clear? You can see the threshold limit also they have given. Let me read it. Okay, let me begin from this. Any sum in the nature of salary, remuneration, commission, bonus, or interest, sum or aggregate of such sum paid or credited more than 20,000 during the financial year, not per month, per financial year. Okay, even if per month salary is less than 20,000, but in a year it will be more than 20,000, should TDS be deducted? Yes. Who is the payer? Partnership firm. Who is the payee? Partner of the firm. What is the TDS rate? 10%. When TDS has to be deducted? At the time of credit of such sum to the account of the partner, including the capital account of the partner, which you guys would have learned in accounts, or at the time of payment, whichever is earlier. Guys, one important thing to note here is section 194T doesn't have any connection to section 40B under the PGBP head. Because under section 40B, there is a limit for the payments made by the firm to the partner to claim such expenses. Sir, what is it? Guys, we need to calculate book profit, all that calculation. There is no amendment in this, but means there is no amendment in section 40B. But I'm just giving a clarification so that you should not get confused. Now assume a firm has paid to the partner 10 lakh remuneration. But as for 40B, only 8 lakh is allowed as an expenses for the firm. So what is taxable for the partner under the head PGBP? 8 lakh. Correct? Yes, sir. What is allowed for the firm as per section 40B will be taxable as business income in the hands of partner. Now, as per section 194T, TDS has to be deducted on 8 lakh, 10 lakh. It is on 10 lakh. That is actual payment. It is on 10 lakh. Is that clear? Yes. Then, note, for section 194 DA, G, H, IB and M, new rates of 2% will be applicable for the entire year 25-26. Guys, if you observe, for this sections, last year there were two rates. From 1st April to 30th September, one rate. Then from 1st October to 31st March, there was one more rate. That is old rate, new rate under the respective sections. But now you remember only the new rates, because for our entire previous year, the new rate 2% will be applicable. Clear? This is also, it is not an amendment, it is more like a clarification which I am giving. It was already there in the last year, but in last year there were two different rates. For first 6 months old rate, for next 6 months the new rate. But now you guys are supposed to remember only the new rate and not the old rate. Yes. So this is the amendment with respect to TDS. Now let us move on to TCS, tax collected at source. Case 1, section 206C subsection 1 There are small changes with respect to timber. Timber or any other forest produce not being tenure lease obtained under the forest lease, TCS rate is 2%. Whereas timber obtained by any mode other than the still TCS rate is 2%. There's a small change in the rate. Okay. Then case 3, section 206C 1F, sale of. Okay. Guys, if there is a sale of motor vehicle exceeding 10 lakh, that is ex showroom price, then the seller has to collect TCS at the rate of 1% on the sale consideration. Correct? Yes. So only one item was covered here, that is motor vehicle. But now the government has added more items under section 206C 1F. Along with motor vehicle, even this items has to be taken care of. What are those? With effect from 1st January 2025, the scope of section 206C 1F has been expanded to include every person being a seller who receives any amount as consideration for sale of any other notified goods exceeding 10 lakh. 2. At the time of receipt of such amount, collect tax from the buyer at 1% of sale consideration. So this paragraph gave the power to the government to notify any other goods. To notify any other goods. Did government use this power? Yes. Accordingly, central government has wide notification notified following goods of value exceeding 10 lakh for collection of tax at source. Which are those? Sir, are we supposed to remember the list? Yes, good to remember, guys. This is an amendment part. So I feel it is important. Any wristwatch, any art piece such as antiques, painting or sculpture, any collectible such as coin or stamp, any aged rowing boat, canoe, helicopter, any pair of sunglasses, any bag such as handbag, purse, any pair of shoes. Sir, bag or shoes and all, more than 10 lakh. Yes, not we cannot purchase so costly items. But anyway, some stars, that is film stars or cricket players, and all, they obviously offered, or even business officials, they may purchase the items, the following items worth more than 10 lakhs. In such case, TCS would be applicable. Yeah. For us, anyway, not applicable. Don't worry. But in exam, they can ask question. Please be careful. Don't write there. Not applicable for me. Anta. Yes. Any sportswear and equipment such as golf kit, skyware, any home theater system, any odds for horse racing in race clubs and odds for polo. Guys, please be careful. If you are purchasing any odds for horse racing in race clubs only, TCS is applicable. Sir, I am taking care of horses by passion. I will not make them to participate in any horse race. And if I am purchasing the horse, will TCS be applicable? No. Then what is this odds for polo? Guys, polo is a game similar to hockey, but the player's ear will be sitting on horse with a stick to play that game. That is called polo. Yes, sir. Fine. Next. And please be careful. They have totally added 10 items here. 10 items along with motor vehicle will continue. Okay. Motor vehicle also will continue, guys. Please be careful with it. Okay. Next. This is an important change, guys. TCS on remittance outside India or sale of overseas tour package under section 206C 1G. There are two transactions covered here. That is sale of overseas tour package. The other one is remittance of money outside India under the liberalized remittance scheme. Yes. So there is a small changes in this. Let us learn. Where the amount is for the purchase of overseas tour program package, what is the TCS rate? 5% up to 10 lakh. Previously it was 7 lakh. Now they have increased it to 10 lakh. 5% till 10 lakhs. And over and above 10 lakh, it is 20%. Two rates. Yes, sir. Then, now if the money has to be remitted outside India under the liberalized remittance scheme, then there are 3 points on that. Where the amount is remitted for the purpose of education or medical treatment, and the amount or aggregate of the amounts being remitted by a buyer is in excess of 10 lakh in a financial year. Okay, up to 10 lakh, no TCS. In excess of 10 lakh, whatever is the difference is there, on that 5%. Clear? Yes. Then, where the amount being remitted out is an education loan obtained. Sir, here also education is there. Guys, this is remitting our own money without taking any loan. Whereas here, I am taking loan and remitting it. Okay. Obtained from any financial institution as defined in section 80E. 80E gives deduction for interest on education loans. Okay. And the amount or aggregate of amounts being remitted by a buyer is in excess of 10 lakhs in a financial year. In this case, previously TCS was there but at a lower rate, but now no TCS, guys. It has been removed. So If a education loan is taken and if it is remitted outside India, then no TCS on that, irrespective of the amount. Whether the amount is less than 10 lakh or more than 10 lakh, doesn't matter. Okay, sir. Last one. Where the amount is remitted for the purpose other than mentioned above, that is other than education or medical. Okay. Anyway, on this there is no TCS at all. So, sir, for example, I am going for a tourism purpose or shopping purpose or vacation, then it will fall here. What is the TCS rate, sir? 20% on the amount in excess of 10 lakh. Up to 10 lakh, no TCS. Over and about 10 lakh, whatever is the difference on that 20%. Is that clear? And please be careful. Whatever 10 lakh is given here, no, it is aggregate. For example, sir, I purchased a foreign tour package number of times in a previous year. Then for every time will I get 10 lakh benefit? No, it is per year. Per year, guys. Clear? And it is the assessor's duty to inform whenever he is purchasing the foreign tour package for second or more times, he should inform the details about the previous purchase of foreign tour package when he is going for the subsequent tour. Clear? Yes. Same way, even for this purpose. Anyway, for this, there is no TCS. For this, aggregate limit per year is 10 lakh, guys. Please be careful. Sir, what if I have remitted the money outside India for both this purpose? Will I get a benefit of 10 plus 10? No, no. Both put together 10 lakh. Got it? I have given a number of illustrations here. Okay, we'll quickly go through it, guys. You guys also just invest some time and go through this in detail. Okay, observe the numbers, date, everything. Oh, quickly. First case, where the amount is for the purchase of overseas tour program package. Assume, guys, I myself will put in this position. I have purchased a package for 4 lakh on 10th July. On that, what is the TCS? 4 lakh into 5%. Okay. Then I went and purchased one more package in the same year on 10th November for 5 lakh. What is the TCS on that? Again 5%. As aggregate also is within 10 lakh. You can see 4 plus 5 is within 10 lakhs. Yes, sir. Even on 5 lakh, 5% TCS would be collected on 10th November. Oh, second case. So assume I went ahead and purchased the foreign tour package for 8 lakhs on 10th July. What is the TCS on that? 5%. Okay. Then one more package I purchased on 10th November for 6 lakh. Okay, now calculate the aggregate. Aggregate comes to 14 lakh. Yes. 8 lakh is already over here. Remaining is how much? 6 lakh. So out of 6 lakh, on 2 lakh 5%, whereas on the remaining 4 lakh 20%. Sir, why on 4 lakh 20%? Because in aggregate it is in excess of 10 lakh. That is 8 plus 2, 10 is over, right? Over and about 10, how much? 4 lakh. On that 20%. Hope you got it. Yes. Next. Assume I purchased a foreign tour package on 10th July for 12 lakh. So straight away, what is the TCS rate? Up to 10 lakh, 5%. In excess of 10 lakh, how much is there? 2 lakh, 20%. Okay. Both the rates will be applicable for single purchase. Next, I purchased one more package for 3 lakhs on 10th November 2025. What is the TCS rate? Straight away 20% because already 10 lakh limit is crossed. Clear? That means when two or more foreign tour packages is purchased in the same year, 5% is up to aggregate limit of 10 lakh and over and about 10 lakh 20%. Is that clear? Yes. Then with respect to remittance, I have also given few more illustration. Yeah. Where the amount is remitted for educational or medical purpose outside India. Assume I have remitted 8 lakh on 15th September, no TCS. Then another 8 lakh on 5th February 2026. Okay. Sir, is TCS applicable? Yes. Aggregate you check, 16 is there. So in excess of 10, how much is there? 16 minus 10, 6 lakh. So on 6 lakh, 5%. When TCS would be collected? On 5th February, because that is when the limit is crossed. Sir, what about on 15th September? No TCS. Okay. Next. Assume the amount remitted outside India is not for medical or education purpose. Means it will fall in this category. Okay. Yes. Not for medical and not for education purpose. Then, sir, 8 lakh I remitted on 15th September, no TCS. Then 6 lakh on 5th February 2026. So in aggregate, how much is that, people? 14 lakh. 14 minus 10, how much is there? 4 lakh. On 4 lakh, 20%. 20%. Is that clear? On what date, sir? It would be collected on 5th February. 5th February, guys. But no TCS on 15th September. Okay. Next. Now assume same person, one single person is remitting the money for both the purpose. For both the purpose. That is for education or medical as well as for other purpose. Okay. In that case, assume he remitted 8 lakhs on 15th September 2025 for education or medical purpose. No TCS on it. No TCS. Okay, sir. Then he remitted 5 lakh on 5th February 2026 for any other purpose, not for medical or not for education. Okay. In that case, check the aggregate. Aggregate comes to how much? 13. In excess of 10 lakh, how much is there? 3 lakh. So on 3 lakh, what is the rate, sir? 5% or 20%? What is the purpose now? Other than medical and education. So this rate would be applicable, 20%. So on 3 lakh, 20% TCS would be collected on 5th February, guys. Got it? Yes, sir. Then, yeah. Now, I have just interchanged the dates. Please be careful. First, assessee remitted for any purpose other than education and medical 5 lakh on 15th September. As it is within 10 lakh, no TCS. Okay. Then he remitted 8 lakh for medical or education purpose on 5th February 2026. Is TCS applicable? Yes. What is the aggregate amount? Check it. 8 plus 5, 13 lakh. In excess of 10 lakh, how much is there? 3 lakh. So on 3 lakh, 5%. Why 5%, sir? Because this is the second remittance. So when he did a remittance for education or medical purpose, 10 lakh limit has been crossed. So in that case, 5% would be the TCS rate, which would be collected on what date, guys? 5th February 2026. Yes, fine. That is all about the TCS, guys. So there is few good news also for you. Few sections which was a part of your syllabus has been removed. Which are those, sir? TCS on sale of goods under section 206C1H, where if the sale of goods was more than 10 lakh, then TCS was supposed to, not sorry, more than 50 lakh, then TCS was supposed to be collected by the seller. That section has been removed. That section has been removed. Yes, but section 194Q continues. Okay, under section 194Q, the buyer has to deduct TDS. No, that will continue. Only section 206C1H has been removed, guys. Please be careful. Yes, same way, under TDS and TCS, one section has been removed. Higher rate of TDS for non-filers of income tax return under section 206AB, or higher rate of TCS for non-filers of income tax return, whom we call it as specified person, under section 206CCA has been removed. So you need not study these sections. Yeah. Next amendment is with respect to assessment procedure, that is returns. Two sections which was a part of your syllabus has been removed, that is section 139(6) and 6A has been removed. The most important amendment in this chapter is the option to file updated return. Yes, which is covered under section 139 subsection 8A. Guys, previously the time limit to file updated return was 24 months from the end of assessment year, but now the limit has been doubled, so it is within 48 months. Within 48 months, guys. So for example, for assessment year 26-27, the updated return can be filed till what date? 31st March 2031. 2031. Okay, so you can just update the change. What was 24 months now has been increased to 48 months. Okay, yes. Now, even tax on updated return, there is an amendment in this, guys, as per section 140B, very important. Please pay attention. Okay, let me just try to explain this with a chart. Okay, look here, look here. Hello, look here, look here. Yes. Assume we are filing an updated return for our previous year, which is our previous year 25-26. And accordingly, assessment year is 26-27. Yes, sir. So, what is the end of the assessment year, guys? 31st March 2027. So how much time do we have to update our return or to file update return is 48 months from here. 48 months from here. If I have to little explain in detail, guys, let us assume the actual date of filing the return is 31st July. There are actually three due dates, 31st July or 31st October or 30th November of assessment year. So let me take 31st July is the due date applicable to the assessee. Okay. On or before this, you need to file original return. OR stands for original return. Okay. Sir, what if there is any omissions or mistakes in original return? You can file revised return on or before 31st December of assessment year. Or if you have not at all filed the original return, you can file belated return on or before 31st December of assessment year. Guys, only once the window for or the door for revised or belated return closes, the door for updated return will open. So that means, can I file my updated return on or after this date? After this date. Not on that date, after that date. Means, can I tell the date to file updated return will be from 1st January 27? Yes. But the deadline given is 48 months, not from 1st January. It is from 31st March of the assessment year. So totally assessee will get 48 months plus 3 months also. What is that 3 months, sir? I didn't get it. Jan, Feb and March. That is after this. In between this, we will have 3 months, no? Even during that month or during that period, can we file updated return? Yes, we can file it. Clear? So totally, please don't write this in your answer. I'm just explaining you. Okay. Once the door for belated return or revised return closes, then the door for updated return will open. And accordingly, along with tax, interest and late fee, you should also pay the additional tax when you are filing updated return. And how much is that additional tax? There is an amendment in that. We will see that. Okay. If the assessee has filed updated return within 12 months from the end of assessment year, then how much additional tax he should pay? Guys, additional tax is over and above income tax plus interest plus late fee plus this amount. Please be careful. How much is that? 25% of aggregate of tax and interest amount. And late fee we should not consider here. While calculating this percentage, late fee will not come. All. If assessee has filed updated return after 12 months but within 24 months from the end of relevant assessment year, then 50% of interest and tax he has to pay as additional tax. Okay. Sir, what if he has filed the bill, updated return after 24 months but before 36 months? Then the additional tax is 60%. And accordingly, if the updated return is filed after 36 months but before 48 months from the end of relevant assessment year, then the additional tax is 75%, guys. Previously only these two were there. Now because the time limit was 24 months, but now as the time limit is extended for 48 months, they have added two more. Clear? Yes, just remember this percentage: 25, 50, 60 and 75. As you take longer period to file the updated return, the more amount you have to pay as additional tax. Okay. Even for this, I have just drawn one time chart. You can observe you. Okay, this is the end of assessment year, 31st March 2027. As per this, correct? Yes. From that time, how much time limit is there to file the updated return? 48 months totally. Assume the updated return is filed within 12 months from the end of assessment year. How much additional tax has to be paid? 25%. Sir, what if updated return is filed after 12 months but before 24 months, that is in between this time period, then the additional tax is 50%. Sir, what if the updated return is filed after 24 months but before 36 months, then additional tax is 60%. Sir, what if the updated return is filed after 36 months but before 48 months, then the additional tax is 75%. Clear? And whatever these percentages are there, it has to be applied on tax plus interest and not on late fee. So totally assessee has to pay what and all? Tax plus interest plus late fee plus additional tax. And this additional tax depends on what? Tax plus interest. We need to apply the respective percentage on aggregate of what? Tax plus interest. Is that clear? Yes, sir. I have added a few illustrations here for better understanding. Let us quickly go through it. Yes. Now assume assessee has not at all filed original or belated return. Now he wants to file updated return. Can he file, sir? Yes, he can file. Even though he has not filed any return, he can still file updated return. Okay. So now as per updated return, what is his tax liability? Assume final tax liability including surcharge and cess is coming to 15 lakh and Advance tax, he has already paid 5 lakh. TDS already deducted on his income by various payers is 2 lakh. So what is the balance tax to be paid? 8 lakh. But as there is delay in payment of tax because there is also a delay in filing the returns, assuming he is supposed to pay interest 80,000 and late fee 5,000. So that the total liability to be paid comes to how much? 8 lakh 85,000. And sir, over and above this, should he also pay additional tax? Yes, he should pay additional tax. One second. He should also pay additional tax. How much, sir? We need to calculate the aggregate of tax plus interest, which comes to 8 lakh 80,000 guys. On that, we need to see. Okay, any of these scenarios will come, not all four. Guys, all four simultaneously cannot happen, any one. But I have just given all four here for your better understanding. Okay. Let us assume updated return is filed within 12 months from the end of assessment year. In that case, what is the additional tax tax? 8 lakh 80,000 into 20%, 25%. How did I get 8 lakh 80,000 guys? Tax plus interest, no late fee. Okay. Yes. So assume the assessor has filed the updated return within 12 months from the end of assessment year. Then totally how much he has to pay? 8 lakh 85 plus 220. Okay. Yes. Next. What if updated return is filed after 12 months but before 24 months? Then the percentage is 50% on 8 lakh 80,000, which gives us 4 lakh 40. So what if updated return is filed after 24 months and before 36 months? Then 60%. And what if it is more than 36 months and before 48 months? Then 75%. You can see. Clear? The amount remains same here, but the percentage will keep on increasing. And accordingly, the amount also will be increasing. Assume I filed my updated return after 36 months but before 48 months from the end of assessment year. Totally, how much should I pay in this case? 8 lakh 85 plus 6 lakh 60. Got it? Yes, sir. Next, one more scenario. Sir, I have filed my original return or belated return or revised return, but there was a short payment. Now I want to update a return. Is it allowed? Yes, they will allow it. And if updated return brings more revenue to the government, they will allow it. If it reduces the revenue of the government, they will not allow it. For example, sir, I have already filed my return in which tax liability was 6 lakh. Now I want to reduce it to 5 lakh by filing updated return. Will they allow it? No, sorry, they will not allow. Okay. So I have given one illustration on that. Let us see. Tax paid as per original or belated or revised return, including surcharge and cess, is 15 lakh. We already paid this. Tax payable as per updated return is how much? 25 lakh. That means there is a short payment of how much? 10 lakh. So I'm ready to pay 10 lakh through updated return. Okay. Now, as there is a delay in payment of 10 lakh, there is also interest levied, which is 50,000 and late fee 5,000. Okay. Late fee, if you already filed return, then late fee may not come, but I am taking it. I repeat, if I have already filed the return, then if I am filing the updated return later, then late fee may not come. But sir, what if I have filed belated return or original return, which I have filed after due date, which we call it as belated return, then late fee will be there? Yes. Yeah, but in this illustration, I have taken it. This may or may not come. Okay. Yes. So the total amount to be paid along with updated return is 10 lakh 55,000 plus additional tax. So how much additional tax? Let us see. If the updated return is filed within 12 months from the end of assessment year, then 10 lakh 50,000, that is tax plus 50,000. Please be careful. Don't take 25 lakh here. We already paid 15. So I will not pay this again. So we need to take 10 plus 50, which is 10 lakh 50,000 into 25%, which gives us 10 lakh 62,500. Sir, what if the updated return is filed after 12 months but before 24 months? Then the percentage is 50%. Got it? Sir, what if it is after 24 but before 36 months? 60%. What if it is after 36 months and before 48 months? Then 75%. Same calculations. Okay. One thing you have to note here is this part. This part, please be careful. Clear? The things will change depending upon whether the return was filed or not filed. Got it, people? Yes. Fine, guys. So this was the amendments applicable for May or June 2026 exams. I have tried to cover it extensively, guys, along with questions and illustrations so that you will get 100% clarity. I know I have taken little more time, but that's okay. I want you guys to understand as it is. And if in case, guys, if you don't have any clarity with respect to any topics, any chapters or anything, we have new tax recorded classes and printed books available as applicable for the respective attempt in the current year. Please have a look into it. Visit our website, have a check. Each and every topic I have covered in detail along with maximum questions. Okay, so if at all, if you want, or if you want to suggest it for any of your friends, please do it. And be a part of our Telegram and WhatsApp channel, because any updates going forward relating to subject or exams, I would be updating it in my channels, guys. So hope this session was helpful for you. All the very best. You are going to rock it.